everyone says. How's that looking? Let's just see if they've got some sound now. Let me know if you can hear me now. Everything looks to be on my end. There we go. Okay, perfect. Thanks, Mo. Right, well, let's start that again. Thanks again for coming along. Thanks for tuning in. And Bitcoin's done it again for me, hasn't it? It has utterly and totally screwed over what I wanted to talk about tonight. Well, no, not necessarily. But it's amazing the amount of times that Bitcoin will do this. I will lay out what I want to talk about, and then with a couple of hours to go, Bitcoin will just do completely the opposite. And, you know, it's kind of hard because I still want to talk about what I want to talk about, but I've got a whole new extra subject that I want to introduce. So there's plenty that we need to get through and have a discussion about. So obviously we're going to talk about Grayscale. We're going to talk about the SEC, well, the appeal ruling, what that actually means. I was going to talk about spot ETFs anyway, because there's a lot of those that are up for renewal at the end of this week. And that was kind of the whole point of the title of the video, or the stream, if you will. You know, Bitcoin has been down. It's been on a bit of a run, but there is still plenty of fight within it. There is still something to get behind. And I was going to lead that into, you know, my macro. It's not even macro. It's kind of like it's getting close to being short-term plan, because we're not that far away. We're about 220 days away from the halving. But actually, historically, October onwards has generally been a pretty good month for Bitcoin and for cryptocurrency. So we're not far away from really thinking if next year is going to be the halving and the start of the bull run, position ourselves right. So we'll have a look at that. One of the other things that I want to talk about is Polkadot 2.0. I know I said I was going to do a separate video on that. I'll explain how or why I haven't been able to achieve that, but we're certainly going to go over that. Have a look at some of the questions. One of them that was asked is actually about hash rate, following on from a Telegram post that came out. So we're going to go over hash rate. I'm going to give you my view on hash rate. It's completely different to Siam's. So, you know, bit of a counter argument to that there. And then we've got our research project, which is Relio, or Rio, the ticker is. Kind of an interesting one, and we'll go through that and you guys can have a look at what you think. We'll cover a bit more news, and then we will also talk about Bitcoin price, sort of where it sits in cycles and movements. We'll have a look at some of the other altcoins, but given what's happened with Bitcoin, most other things are moving in the same direction. That doesn't mean that Bitcoin ain't going to turn around and do something completely different in the next couple of hours. But I'll try and get through everything as quick as I can. I'll be looking at chat, so any questions, fire them in there. Any problems with the sound, the video, whatever, just let me know, and we will have a dig through. So, right, let's just change the screen. Find the right one. Okay, so as you can see, Bitcoin's had an incredible move up at the moment, around about 7% today. Happened at 3 o'clock after the announcement of the Grayscale news, which we'll dig into. But we're kind of seeing here, it was very flat. Bars were getting, I mean, let's just enlarge this chart. Bars were getting pretty tight. It was either going to fall off the cliff, but actually it's an inverted Bart Simpson at the moment. Potential little W pattern in there. You know, double bottom, whatever you want to call it. And now we're sort of, you know, we're finding resistance in and around 28,000. Later on, we'll have a look and see why that level is significant, or if it is significant, on what it's going to do. But if we just close this one down and have a look at Ethereum in the center, and I've actually moved Casper now. So many people ask me about it onto the main cover, but you can kind of see that all other cryptos have done the same. And if we have a look down the right-hand side of the screen, sort of just where I am, most things have, you know, they've moved fairly decently, a couple of percent, some up to sort of 5. I don't think anything surpassed that I'm looking at has surpassed Bitcoin. Good to see Casper. Casper only an hour ago was actually sort of pretty much at break even today, but it's finally woken up again and it's starting to climb up and down. So we'll have a look at those a little bit later. There's been two things that have kind of kicked that off. So we had the Grayscale news, which obviously led to one thing, but then again, if I just open up the S&P, this had a pump, and so this started moving pretty much the same time as the Grayscale news dropped. But that's also going to help any risk on assets. So Bitcoin and cryptocurrencies have felt a double lift from today, and the dollar index has obviously done the inverse of what the S&P's done. Let's get that off the 1 hour. I'll just get back to there. Right, don't necessarily need this one open at the moment, so we'll close that. And I'm just going to quickly go over some of the other news that I was going to cover before Grayscale. But I'm not going to go into too much detail about it now, just given how much we've got to talk over. So one of the first things I wanted to talk about, DCG. If we cast your mind all the way back to the beginning of the year, digital currency group DCG, there was some big concerns in terms of where that was going, how it was going to work after the back of Genesis, etc. I'm not going to go back through that, but actually an agreement's been reached in principle for the amount, or the dollar equivalent amount of recoveries that's available for the creditors. That's going to range anywhere from 70 to 90%. Now, the reason is, it's just in terms of what that asset is going to actually be and where that value is going to sit against US dollar. But those that are creditors on the list, and I don't have a timescale for when that is, but at the moment they have agreed a nominal amount. So a positive step forward there, something I think people have kind of forgotten about, but that one's still working up in the background. One of the other ones, BitBoy. Most of you that are on now, probably have YouTube accounts that are connected to, some sort of crypto influencers, and you follow on crypto Twitter. One of the biggest ones out there is BitBoy Crypto, Ben Armstrong. So he built his own brand, as it says here, 3.3 million followers. However, the company that runs that brand, which he obviously wasn't the main person in charge of it, have decided they're going to let him go. And so he is no longer affiliated with the brand that he created. Now, for those of you that don't know who he is, this is the guy. Not this guy here. That's Crypto, the guy with the beard. He is definitely a polar force in the crypto space. And to be honest with you, I was never really the world's biggest fan of him. However, during the whole FTX saga, he was the first person calling it out 6 months before everyone else was. So you got to give him a bit of credit there, but he has been known for a bit of a pump and dump, has been known to shill tokens and effectively, dump them, allegedly, on his community. So, a lot of people don't have much time for him, but he has been let go. And the other thing, the two reasons that have been cited around this are substance abuse, but the main one apparently is financial damage to employees. That's what it says down here. What I mean by that was he was had a lot of lawsuits against him. He was also trying on a lot of lawsuits, etc. He was calling people out. People weren't particularly happy with that. And I suppose ultimately the parent company have decided, he's not the right face for the brand anymore. It's costing us too much money and he's got to go. So don't know where that's going to leave him or what that's going to mean, but it'll be interesting to see how that one plays out. I'm just going to close these as we go. I don't think we need 38 tabs open. Okay, let's touch on the Grayscale win. So, it was announced around about 3 o'clock today. Excuse me, that Grayscale wins SEC lawsuit for Bitcoin ETF review. Now, on the face of that alone, you think amazing. And don't get me wrong, this is a really positive step. But I think actually we need to just take a step back and just try and understand what was going on, why was there a lawsuit in the first place, and what this ruling actually means. So, let me just clear my throat. So back in, I suppose, 2022, Grayscale had made an application to turn their Grayscale GBTC trust, if you will, into an ETF, into a spot ETF. And at the time, the SEC, they considered it and then they rejected it, basically just saying that, the spot ETF market could be heavily manipulated. And so that is not something that they would want to encourage and set about, that's not the right term. What's the word I'm looking for? Subject potential customers to that kind of manipulation. So it was rejected. Grayscale almost immediately went to appeal, and this is what the lawsuit has come about. So I think this kind of covers everything in this one here. It might be in another article. I'll just double check which one. Here we go. Yeah. I'll post all of these in the group afterwards, so don't worry about it too much if you haven't seen it. But so as we said, the SEC, though, worried spot ETFs would be vulnerable to manipulation. So what went down with Grayscale? So as I said, SEC denied Grayscale's application to convert its spot Grayscale Bitcoin Trust into an ETF. The agency has rejected spot ETFs in the past. It's done a few of those, but it has actually allowed Bitcoin futures ETFs, and that's important for this ruling. So Grayscale proposed using the same market manipulation safeguards that have been approved for the future ETFs. But SEC said that didn't meet its bar. And there was a bit of a well, why and how. So Grayscale's argument was that if Bitcoin futures ETF surveillance arrangements satisfies the spot ETF, then it should be the same. Satisfy the futures ETF under the SEC requirements, then it should be the same for spot ETF, given that the prices are so directly correlated. Bitcoin futures ETF track Bitcoin futures on the trade on the Chicago Mercantile Exchange, or the CME. We've talked about CME gaps before. And they surveil futures market conditions and price movements on a real-time, ongoing basis in order to detect and prevent price distortions, including price distortions caused by manipulative efforts. Grayscale told the court in March that a spot ETF would better protect investors because it'd give them the benefits of the CME oversight of the market. Basically, the SEC, however, said Grayscale lacks the data to determine whether a CME futures surveillance agreement could also detect potential manipulation in the spot ETFs. Okay, so that's the backstory of why it was rejected, and that's kind of the argument of what they're appealing against. So this way goes to what the courts have just come out and said. And the court panel of judges, there were 3 judges that sat on this, said Grayscale showed its proposed Bitcoin ETF is materially similar to the approved Bitcoin futures ETFs. That's because the underlying assets, Bitcoin and Bitcoin futures, are closely correlated. That's their words. And because the surveillance sharing agreement of the CME are identical and should have the same likelihood of detecting fraudulent and manipulative conduct in the market for Bitcoin. So with that in mind, the court ruled the SEC was arbitrary and capricious, I don't know if that's right, to reject the filing because it never explained why Grayscale owning Bitcoin rather than Bitcoin futures affects the CME's ability to detect fraud. So this is it. This is only one page that came out you can have a look at. So you've got Grayscale versus the SEC, petition of review for an order of the Securities Exchange Commission. They're the judges, the 3 of them. And the wording here is quite important, and that's why I'm going through it. This cause came to be heard on petition for review. Okay, that's a key term, petition for review of an order of the SEC, and was argued by counsel. On consideration thereof, it is ordered and adjourned that Grayscale's petition for review be granted and the Commission's order be vacated, in accordance with the opinion of the court filed here in this date. Okay, so Grayscale won their petition for review. So you start to suddenly get, I don't think I've got it up here, sadly. No, I don't have this one. But effectively, you've started to see headlines across a lot of financial news outlets and all over Twitter that their spot ETF has been approved. That's not actually the case. The petition for review basically means that the court has agreed that there was sufficient evidence for the outright rejection. And so the ball is, well, that's not necessarily true, but if neither side appeal, the ball is then effectively in the SEC's court. Now, they have a couple of options. They certainly have to look over their findings again, and they can either approve the spot ETF or they can reject it on other grounds. So the spot ETF has not been won yet, and I think that's, we need to make sure that that is understood. But there's also an opportunity for the SEC to appeal the decision. So what happens now with this section here? Both parties have 45 days to appeal the ruling, in which case it would either go to the Supreme Court or an on-bank panel review. Don't know what that is, I'll be honest. It's unclear whether or not the SEC will appeal. If Grayscale ultimately prevails and the SEC does not appeal, the court would specify how its decision should be executed. This could include instructing the SEC to improve the application or to revisit Grayscale's application, in which case the SEC could still reject the proposal on other grounds. So don't get me wrong, this is a huge step forward. It's making the SEC look completely stupid again. You look on, win after win with Ripple and XRP. Now we've got this, some really positive steps. And I think the momentum is justified within the market at the moment because it is a great step forward. But it isn't a mission accomplished. There's no spot ETF approval after this. But what is interesting, and this is what I was going to talk about regardless, is we actually have a whole host of Bitcoin ETF deadlines for the end of this week. And so I do find the timing of this very interesting, because had this ruling not come out, there's potential that the SEC could have used exactly the same argument for all the other ETFs, not reject them, but just delay the application. With this coming out, I'm wondering now whether or not this may change the narrative of what's going to happen on Friday. Has this been deliberately timed for that to come? And I think that's why we've had such strong reaction in the markets at the moment. It'll be interesting to see whether this is a leverage reaction, as in people are just long in it, or it's actually spot buys, and people are starting to dig in. But what is interesting, as I said, is the amount of ETF deadlines that come along. So we've got here, Bitwise's application is set for consideration on September 1st. All the other ones I'm going to talk about are set for September 2nd, which is a Saturday. Given that it's a bank holiday weekend this weekend, it's highly likely that all of the decisions, whether to approve, reject, or delay, will come out this Friday. If we just scroll down, I don't know if you guys can see this. I'll zoom in a bit. So the top one, this is Cathie Wood's ARK 21 shares. So that was a couple of weeks ago. That was delayed, so it wasn't approved or rejected. But we've got everybody else's. So we've got Bitwise on the 1st. That's the third one down. And then we've got BlackRock, which everyone's talking about on the 2nd. Remember, this is an American calendar, so months are first. Then we've got Van Eyck's, Wisdom Trees, Invesco, Fidelity, Valkyrie. Fidelity. It's coming on Saturday. Valkyrie's on Monday. However, that's a bank holiday, so we're kind of expecting that will probably happen on Friday as well. So yeah, I think we've got a really interesting week ahead of us, and I don't know which way it's going to go. We'll have a look at the poll in a moment. But if they were just going to use the standard excuse of, we don't understand that how you can think as approving a futures ETF is anywhere near the same category as a spot ETF, well, actually, the judges have now potentially said that that excuse won't work. So yeah, maybe we are literally on the cusp of a spot ETF approval. And if we are, then I think that's going to be a very, very interesting reaction. Should that be approved? So kind of in two minds. I'm happy that I'm, kind of decently invested in the market at the moment. I still wish I had a bit more Bitcoin, I'll be honest. And I sold some altcoins, 2 weeks ago, maybe a week ago, I can't remember now, thinking we were going to move down. That has backfired. But at the same time, we don't know where the markets are going to go. I want to see what happens over the next couple of days. This momentum might be short-lived before we look at other factors that could drive that one down. But yeah, certainly very interesting going forward. Let's have a look at the poll. Tell you what, we'll just end it there. Oops. So 37% think yes, 37 say no, 25 unsure. I'm going to have to sit on the fence as well. So that would take it down to 33% for all of them. Just because I think it's great that we potentially have got rid of that excuse, so they have to think of something else. But at the same time, I'm sure they're already crossing T's and dotting I's, and whilst the SEC may not have known the outcome of it till today, they could have had a good idea of how that appeal had gone. So buying more time seems sensible for me, unfortunately. Right, that was kind of the main news. There is a little bit more news that I wanted to talk about, but it's only in relation because of an RT question. So I'll have a look at the question first. So the top one's off Richard. Now, Richard, there's like 7 Richards in the group, so I don't know which one this one is, but I thank you for your question. Following on from Simon's Telegram, what does Simon mean by hash rate and how does it affect price? So I don't even have Telegram open, just bear with me. Let's have a look. It was this one that turned into a tweet, wasn't it? Yeah, okay, let's just see what happens. I'll do it here just in case. There we go. Pops up on the screen. I'm not going to read through this because it's quite long. But I'm talking about hash rate, and he effectively summarizes that hash rate is kind of like it's a canary in the coal mine for what's going to happen to price. So a strong amount of hash rate typically has led, certainly with BTC, in driving the price north as well. But what is hash rate? And I think that's what Richard wants to try and understand. So let's have a look at that. I just thought, right, well, I'll just go to Investopedia. We'll just get it straight from the horse's mouth. But effectively, hash rate is the computational power of a network, and that helps to bolster the security, but also the difficulty. That was my attempt at it, but let's actually see what it says here. So hash rate is the measure of the computational power of proof of work cryptocurrency networks. So tick, at least got that right. It's used to determine the health, security, and mining difficulty. So, okay, I missed out health, but I think that comes part and parcel with decent security and decent difficulty. I'm not going to bother going through this all. Understanding hash rate. Hash rate is a measure of the number of guesses each computer makes per second to solve the hash of the blockchain network. This is an essential part of crypto mining process for anything that's proof of work. So when we talk about proof of work, obviously it's Bitcoin. Used to be Ethereum, that's gone to proof of stake now, but we're talking about Dogecoin. We're talking about Dash, Litecoin, Ethereum Classic, Casper, Ravencoin, Monero. God, there's loads. I mean, there's loads of proof of works. So how it works, so the blockchain network employs a hashing algorithm that randomly generates a hash code. Mining computers on the blockchain network compete to guess the hash value. The amount of guesses per second on the blockchain network is measured as the hash rate. The hash is solved in inverted commas when the miner guesses the value that is lower than or equal to the numeric value of the target hash. And again, for Bitcoin, sort of block rate is around about once every 10 minutes. And remember, the block reward currently is 6.5 BTC. 6.25, sorry. The winning miner is allowed to add the next block to the blockchain and earn the crypto rewards known as the block rewards. I'll post this within there, but let's just go to why is hash rate important. So hash rate has an importance as an indicator of the overall security of the blockchain network, as well as the mining difficulty for miners to earn block rewards. The more miners who are part of the blockchain network competing to mine blocks, the less likely it is for malicious attacks on the network to occur. Because you've got to remember, whenever a block is added, that ledger, whatever you want to call it, is sent out and it has to be verified by everybody. The more miners you have on there, the less chance you have for that 51% attack. So remember, proof of works are vulnerable if one entity owns more than 50%, that 51% of the blockchain or the mining capability of the blockchain, because then they can force through a false narrative and they can just approve that side of it. Hash rate also affects the mining difficulty of a given blockchain. Some blockchains increase the difficulty of mining a block as the hash rate increases. This means crypto networks with very high hash rates may be nearly impossible for individual miners to compete. This is outdated, it's back in March, so we won't bother having a look at that. What happens when the hash rate changes? So the hash rate is a gauge of the overall network activity by miners of a proof of work network. When the hash rate increases, here's what it means. More computational resources, more electrical power to consume it and to work it. The network increases in security. It becomes too big to overpower by a single entity, so that 51% blunt force attack. Mining becomes much more difficult, and most blockchain network algorithms increase the difficulty to mine as the hash rate increases. Okay, if it decreases, fewer miners are competing to add blocks and earn rewards. The network becomes less secure, more vulnerable to that 51% attack, which I've talked about. Less power and mining difficulty declines, making it easier to mine blocks to effectively win. Have you noticed, though, in that definition, there's nothing that relates it to price? And for me, that's the key thing that I want to get across. And I'm going to give you some examples, and I've got plenty of them up here. I'm just going to zoom into here. This narrative kind of sort of goes into it. The most obvious criticism in general. So this criticism, so people often put like price overlaid with hash rate. So the hash rate here is the purple line and price is the blue line. I've got a better chart that has a look at that. And you can kind of say, well, generally, look, the hash rate has gone up and price over time has gone up. But for me, it's not as simple as that. These are long periods here, and we need to address that. This is years, each of those blocks. And the most obvious criticism is that generally there is almost no correlation between price and hashing power. In fact, when one looks at the chart, one notices that while the price of Bitcoin is all over the place, hashing power is steady line that goes almost constantly upwards. Other criticism is that proponents get this relationship backwards. Miners live and die by the profitability of their operation, which is a function of the cost of electricity and the price of Bitcoin. So there is a thing called the hash price, which is effectively the cost to mine one token. And I think they work it out in seconds. I can't remember because I haven't done mining for a long time. Where was I? If you ask almost any miner, they would tell you that it's not the hash rate that affects the price of Bitcoin. Rather, it's the price of Bitcoin that affects the hash rate. When the Bitcoin price is high, more hash rate joins the network as less efficient miners can remain profitable due to fatter margins. As the price goes down, the margin thins and fewer miners can remain profitable. Despite this fact and any local short-term correlations, we still see hash rate tending to increase over the long term, and that's because most ASICs eventually find themselves in the hand of more efficient miners who buy up the hardware. And there's a news article here that came out today, and it was prior to this pump, I should add, came out yesterday. Bitcoin revenue per terahash nears record lows as the hash rate soars. So this is going back into that hash price. So as Bitcoin network hash rates tops at 414, is that echo hash? I don't know what that is, I'll be honest, but it's quadrillion hashes. Miners are struggling to stay afloat amid plummeting profitability. So Bitcoin mining revenue, or hash price, is a measure of dollars earned per terahash per day. Okay, it's done per day. Has slumped to levels not seen since the collapse of FTX in November 2022, whilst the hash rate has reached new highs. Anyway, you can go through this article here to have a look at that. But let's try and sort of, have a look at that from an example. I'm just checking people are still there. Oh, you're obviously either bored to death talking about hash rate or you're fascinated. And there'll be no comment yet. It's not a problem. There's no comments. Don't worry. Right. So look, this is the Bitcoin hash rate historical chart. And I've done it for all time. And because we're at 414 echo hashes, sorry guys, someone will tell me what an echo hash is, I'm sure. But it looks like it's just, flatline at the bottom. This would have been incredibly bumpy if we'd zoomed in back then. But since then, it's absolutely skyrocketed. And for any of you that's quite observant of what you're looking at the chart, we've got the dates down the bottom here. And just have a look. So we've got July 2021. And then we've got, and it's going to be roughly around about here, but we've got January 2022. So around about where my cursor is at the moment, so probably around about 160 EH, was the peak of the bull run. So after that, we were in the bear market. Okay, and we know what happened to Bitcoin's price in the bear market. It utterly dumped from 69,000 down to 15,000. And yet the hash rate for the last 2 years has gone parabolic. It's almost 4x from its bottom. And so, and I'm not talking, this isn't a small dip over a month or two. This is nearly 2 years worth of that going up and the price of Bitcoin either flying down or, let's face it, ranging sideways, which is what we've been doing for the last 6 months. And so this is where I kind of understand that if you zoom out far enough, lines kind of seem to be moving in the same direction. But actually, you don't even have to zoom that far to see the hash rate doesn't necessarily mean that the price is going to continue to go up. So if we have a look at Glassnodes, this is a chart on Glassnodes. I wish I had signed up to Glassnodes, but it's ridiculously expensive to get the detail that you want. So I can only do this with the Bitcoin chart. But I'll zoom in so you can see it a little bit better. Oops, that's not what I meant to do. That's what I meant to do. So obviously the black line here is Bitcoin price, and then the orange line is the hash rate. So you can kind of see, as I said, from the lows back down in June 2021, all it's done since then is climb up. Now, yes, we did have that pump up. So what I'm going to do is I'm going to take it from the high in November, and you can see, they're completely invertly correlated. And so straight away off that one, we can see that that's the reason that happened. Now, what happened here? Does anyone remember what happened here and why both price dumped and also the hash rate dumped? I'm going to give you some time because I know there's probably a little bit of delay, but I will jump into it now. China banned mining again. Okay, at the same time that Elon said that it was too environmentally unfriendly and it wasn't green enough, and so he dumped all of his from Tesla. And it was just with China shutting down one of the, it's probably the largest country in the world mined. It was then illegal to do that. And what all those companies have to do is they have to shut down for a month or two and move to the likes of Kazakhstan or somewhere else and reset up. And so that equipment, it wasn't just thrown in the bin. It just stalled for a time whilst they reset it up, and then off they went again. And so yeah, China ban. That's exactly it. But the point I'm just trying to make is that we can see from this one chart alone that that isn't telling us the same picture. Now, we can have a look at some other ones as well. So Litecoin, very similar. This is just hash rate at the moment. And you can see that it's had these, as strong as it is now, it's had these huge pullbacks through bear markets. And so what we had, after the peak in December 17, it went from almost 350 down to 150. It lost, 50% of its hash rate, just drove back down. That was a huge correction. And had this right-hand side not be there, that would have looked ugly as hell. Then with this massive climb back up, and then again, we had the halving, boom, straight back down. And this went from over 500 all the way back down to, 150. It lost nearly 70% of its hash rate over that time. And then steadily it's climbed up, and this is exactly the same as what we see. So if I have a look at, I'm sorry, I'm having to go to different websites to get the information up. So sorry if everything looks a little different each time. And annoyingly, I'm going to have to, so we can see those swings lows, those swings back. I don't know, I was going to try and zoom in, but it's not really helping. And then we go to Litecoin. So you have a look, since 2020, it's generally been on an incline. Yes, it's had pullbacks, but it's been on an incline. If you have a look at the price of Litecoin, everything's reset. Since 2020, it's done the exact opposite. It's had its high, and then it's dropped back down. Dash, another one. Chart data failed to load. I might cut this one relatively short, just because if I can't load the data, there's no point hammering home the point. There we go, it's here. So Dash has an interesting one where it's peaked, and then it's just fallen away, and it hasn't recovered. And this is over an incredibly long time. And so this is the second point I suppose I'm trying to make is once miners want to move on, they'll move on. Now, yes, it doesn't mean the network's going to die, but the decrease in it just shows that there's a lack of interest of the big boys continuing to mine this because there's other profitable ones out there. So this one, the hash rate has never got back to where it was in 2020. In matter of fact, it's been on a steady decline the whole time. So we had 2018, but you look at 2020, and yeah, we had that little pump there, but it's been relatively the same. If anything, back in 2020, it was 133, we're now at 27. So yes, we had the pump up there, but this seems to mirror that no one's that interested in it, and it's easier to win now, I suppose, and the price is dying off. Now, again, we're in a bear market, so you do expect the price to fall away. Ravencoin was one of the ones that I mined. And this is a classic example of people moving on. Look at it. Huge to start off with, and then nobody cared. Nobody cared anymore. And yeah, it's made some recoveries, but generally it's just down there. And, what do you think that looked like in the start? That would have looked unbelievably epic. Just this thing was going up. It's going to go up and up and up. Hash rate never goes back down. Yes, for Bitcoin, that might be the case because Bitcoin's the king. But some altcoins, the hash rate, when the miners move on, they move on. And so you just got to be aware of that. And so what is interesting with this, for those of you that paid attention, so the hash rate dumped off here, but it had its massive price increase in the last bull run. So sort of, early few months of 2021. So it's still low down. So it still has the opportunity for price to or go up. But again, so there was that pump up and it dropped away. Kind of tying back in with where we are there. I'm not going to bother going through Monero. You kind of get the point. And I suppose, the one thing that Simon, a lot of you are talking about at the moment is Casper. Now, the previous websites I'm on don't have a chart to show what Casper looks like on those ones, but you can do it on this. And that's what this is looking like at the moment. It's been going around this chart since April 2023, and that's incredible. It's gone from 777 terahashes per second to over 14, 15. I don't know what P is. Someone can tell me. No little key down there. So yeah, so that at the moment, this is looking great. This is looking, we're only going to go north, but we've seen on not all, but some of the others, and these are some big names here. It doesn't always happen that way. It doesn't always have to stay that way. And again, Monero, the last 2 years, that's been dropping down as well. Now, Monero has been attacked for plenty of other different reasons. Petahashes, thank you, Reese. So yeah, so that's been attacked for other reasons, and so people are just probably generally losing interest. There's a lot of exchanges where you can't even sell it. So what's the point in mining it if then you have to KYC on a certain exchange, the place that you live in, and then you can't go and sell it because they don't allow that to be sold on that particular exchange. So I kind of get that, but yeah. So just going back to the question about what it is, hopefully I've answered that, but I'll post this link so you can have a read of it yourself. In terms of how does it affect price, to me it doesn't. It is a coincidence, and that's how it will always be. I will never use. I think you'll never have seen me have a look at a hash rate chart going, well, price is definitely going to go that way, because it's just not the case. It happens to kind of do that with Bitcoin, but I think the last 2 years have kind of proven that's not going to be there. Now, that's not to say the next bull run price ain't going to catch up and it's not going to go that way again. And then we zoom out 10, 15 years and that won't even look like a thing, and we won't even notice it because where is it? Where is it? Oh, not that one. Because this bit here will just be like this flat bit here, because it'll have such a high hash rate that you won't even be able to tell. But the point, remains the same. So for me, no, I'm afraid I'm not convinced with that one. So I hope that helps. If you are into your mining, or you do believe it, I'm not saying just throw it completely out there. Just have a look at other ones. What have we got up here? Ethereum, obviously not. But Litecoin, Bitcoin Cash, Dogecoin, Monero, Bitcoin SV, Dash, Zcash, Ethereum Classic, Bitcoin Gold. Vertcoin. I've not heard of Feathercoin or Blackcoin, so I wouldn't have a look at those. But these have been around 4 or 5 years. Just have a look at how they go. These are smaller ones. They're probably a smaller hash rate than even Casper has. Casper is definitely the one at the moment that everyone's heading towards. But the question is going to be how long is that going to last for? And if it suddenly decides that the ASIC mines are going to move away, what's that going to do for the hash rate? If the slack's not picked up by everyone else, it's going to fall. Anyway, we are where we are with that one. Let me just close a few of these down so I can actually see whatever. Sorry, to catch up. Right, I'll tell you what we'll do. I'm going to have a drink. We'll talk about Polkadot, because I promised you that video. Then we'll have a look at Bitcoin price. Then we'll have a look at the research token, and then we'll go from there. Okay. So let me just minimize that. Bring this one up. I've got some notes. This one, not only did it have notes, it had a script, because it's a bit to go through. But just before I do, it's kind of an excuse, and I do apologize, because I promised this video would be out 3 weeks ago. I had that sound issue. I came back from a holiday. And when you look at something, after for anyone that's filmed content, for anyone that's done anything live, you can have a great idea in your head of how you think you're going to go, and you can kind of film it. Then you get stuck in the edit of it, and because you're committing a bit of time, certainly for me, in editing it, you kind of believe in yourself that this is justifiably good, and you should put it out there. And when I got back, I watched it. I just didn't like it. I didn't like what I saw. I thought the way I kind of tried to explain it wasn't done in a very good manner. It just sounded like I was reading from a script rather than just organically having a conversation like I am now to the camera. So I tried to film it again and tried to re-edit it again. I didn't like it. And so I've had 3 attempts at this. And for some reason, I just haven't really been able to explain it how I wanted to. Just because I don't think, when you're talking live, you kind of just, whatever comes out of your mouth, suddenly the audience is stuck with. Whereas when you're filming it, you stop, you go, right, I'll tell you what, I'm just going to repeat that bit, and then you try and edit it together. It just doesn't work. It didn't flow, and I didn't like it. So I know Sally's asked for it a few times. This is going to be it. It'll be what it'll be. Hopefully I'll still be able to get the message across as to what it was. And then, yeah, we'll go from there. Sorry, there's a couple of questions. So Urjan's put, so if hash rate is not related, then do we care if it falls? No, not necessarily. The problem you might have is, if it falls, is that people aren't mining it anymore. So those people who have mined it, have held it. Now they could still hold on to it, but if they're a big organization and they're out for profit, they're probably going to sell that to cover the initial costs and then make whatever profit they need to make. So there's potential, in my opinion, that could happen there. But yeah, you're absolutely right. Chris, but just check 1 petahash per second is 1 quadrillion. Yeah, so that's 1,000 trillion, which is 16 knots? No, 15 knots. Yeah, 16 numbers. Anyway, let's talk about Polkadot. Now, most of you know I'm a big Polkadot fan, and Polkadot Decoded happened, and I think it was in Copenhagen, but I don't know, some Scandinavian country. I think it was Copenhagen at the end of June. And whilst, it's just an opportunity for a lot of developers and a lot of enthusiasts to just come up and talk about stuff, the keynote speech was actually delivered by Gavin Wood, and he laid out where he would like to see Polkadot go, so Polkadot 2.0. And he came up with some really interesting concepts and ideas. And I think because I talk about Polkadot so much, I think it's worth just explaining what potentially some of these changes may turn out to be and where that may go. Now, two things there. One, Polkadot is decentralized, and it's a governance protocol. So, Gavin was clear to say that, these aren't set in stone. These need to be voted on. They need to be, tweaked and refined and everything else. But I think he felt, and you'll see in the video, well, I'm not going to show you the video, but if you do watch it, he feels pretty confident that these will go through. I think everything that he suggests is very well thought out. And the other thing is this kind of just shows, Polkadot, a monster in the last bull run. And it only launched really in 2020. And 2021 was thrust into a bull run. The level of innovation, the level of development that's on it. It's seen some huge things, whether you consider it to be a layer 0, a layer 1, whatever it is. We've got things we'll talk about in a bit more detail, parachains. We've already got these projects and these sub-teams, developers developing other projects off Polkadot. And yet, despite all of that, despite the fact that it's established, the core developers have taken a step back and gone, you know what, it doesn't feel right. I think we can do this better. And they're now going to propose some things to make it better. I think the way they're going to take that is going to really help lift Polkadot just that extra notch. And I am a fan of Polkadot. I'm a huge fan of Gavin Woods. I think it was a great idea when he took a step back and he went back to be a bit more of a developer. And I think he's that kind of character. That's just the way he wants to be. And, you don't get to be the CTO of Ethereum, arguably the biggest altcoin out there. And then, sort of leave that with your head held high and then go and create something else through some of the problems that you feel like you felt whilst you were developing Ethereum. And, continue to innovate the space. So, big props to him. He's a quirky character, and some of the stuff he did in the video, or just prior to the video, he shows in the video, kind of shows what he's like. But let's just have a real 30-second elevator pitch of what Polkadot is. So Polkadot, as I say, whether or not you consider it to be a layer 0 or a layer 1 or both, it was born out of the requirement for the lack of interoperability between blockchains. So, consider blockchains as just silo entities. Within that entity is an ecosystem which completely works. But unfortunately, it's very difficult, costly, or expensive, or all three, or impossible, I suppose, for those individual silos to then speak to each other. So whilst you may have these fantastic opportunities in different block spaces and blockchains, the fact that they don't have the opportunity to sort of move across and to talk and that kind of ease of innovation, etc., was a limitation that Gavin and Polkadot tried to address. So it's an opportunity for it to have that interoperability for different blockchains to be able to speak to you. And that's why people sometimes refer to it as a layer 0. And then you've got the layer 1, the parachains that are off that. In terms of what it looks like and some of the key facts that come with it. So it's all on the Polkadot website. But, the key things just have a think about. They've got this thing called the relay chain. So the relay chain, if you use this image here, I'll keep on scrolling up and back down to it. So the relay chain is the heart, it's the center of the Polkadot network. It's a consensus mechanism. It maintains the security and also powers and keeps the other elements going. Now, the other elements that we talk about, the one you've probably heard me mention the most is parachains. So the parachains are sort of like these individual layer 1 blockchain capabilities that utilize the computational power of Polkadot and the relay chain to sort of form their own project, token, whatever it is you want to go with it. There's another thing. So a parachain is sort of like an entity which you've hired. I'm not trying to think of the right words here without giving everything away. But yeah, which you've rented off Polkadot for a finite amount of time, whether that be 6 months, 12 months, 18 months, or the maximum of 24 months. the reason I've kind of butchered that explanation is there's this other thing called parathreads, which is very, as it says here, similar to parachains, but it's basically got a pay-as-you-go model. So you don't have an end date in mind, but you don't need to always be connected to the relay module. So you might want to just dip in and dip out. So they kind of are the same, but they just split it into two payment methods. You can either rent that space for a finite amount of time, or you can just do pay-as-you-go. And then the other thing is this bridges. So that's sort of, you know, as it says here, this is what enables that interoperability for you to be able to talk to other networks like Bitcoin, like Ethereum, like Avalanche, like whatever else you want to talk to. Yes, okay, it's proof of stake. So we have that consensus mechanism. We've got nominators, we've got validators, we've got collators, exactly the same as where you are and everything else. And then the governance side of things, which you've got council members, and then you've got the technical committee. Obviously, I'm not a developer and I don't get involved in any of that kind of stuff. As a matter of fact, even though I have an incredible large amount of Polkadot that is staked, I actually haven't ever voted on anything. So maybe I should consider that. I'm not going to necessarily go in with technology kind of things. Right, so that's kind of what Polkadot was, and that was what was written in the white paper, and you know how it was delivered to white paper to Polkadot version 1.0. It's exactly that. Now there were problems with this, and this is what the whole keynote speech was about. And let me just get my notes up so I'm actually talking about it in the right order, because I think that's important. What I will just say is I'll post the video. This is the video I'm referring to. It's on the Parachains YouTube page. It is the keynote by Gavin Wood. Now, it's an hour and 40 minutes long, but he doesn't speak until 40 minutes into it. So if you are interested in watching it, then just fast forward 40 minutes and then you go from there. And then he talks for the next hour about all these things. I'm not going to bother sort of sitting here and playing snippets from the video. You just have to watch it in your own time if you're interested. And if you're not, you just have to believe what I've said. I think that's a fair deal. So he identifies a few key areas that they want to address. The underlying theme throughout all of it is resilience, is maintaining that security both now and in the future. So there's a lot of things that they are working on, just making sure that any changes that they do make keeps the trust in there, keeps sort of, you know, the Web3 trust and why security is so important to maintain that trust going forward. And he talks about a few ways in which you can do that. It's all about coding and stuff, and that's beyond me. So I'm going to skirt over that but it's throughout the entire talk, he constantly goes back to that. So it's one of the underlying themes. He talks about the parachain auction and the parachain slots and how they are rented, and the problems with that, and then how they can look to overcome that. And that's something we're going to discuss. He talks about cleaning up the relay chain. So how Polkadot's focus in Polkadot 1.0, it's chain or parachain inverted commas centric. Everything's about the parachains, and that user experience can feel disjointed, it can feel disrupted, and it doesn't flow how he'd like it to. So how they're going to tidy that up and how that relationship's going to work. He's got some fantastic drawings on that, which we'll have a look through. And then he talks about the accords. So we didn't touch on it, but there's a thing called the XCM, which is the cross-chain module or mechanism. That's effectively the universal translator that allows the communication between the different bridges and the different parachains, etc. That's how it all works. And how they're going to rearrange Polkadot in the future has the potential to just sort of cause an increased amount of confusion, because there could be so much interaction between things. So they've come up with this idea of these things they call the accords, which are effectively a digital handshake between agreeing parties in which they can create their own rules and how those rules are going to be enforced, etc., for the duration of the time that they are using the Polkadot network. So he goes on to talk about that, which again we'll talk about briefly. That's probably all of the ones that I think is worth talking about. So let's just start with the first one, and that's the parachain slots. So if you wanted to get a parachain slot, you had to have an auction, and what would happen is, to qualify for that, you needed quite a lot of money or backing, if you will. So you would go on an incredible marketing campaign to get your community all riled up and effectively stake DOT on your behalf, so that you could then enter into an auction. And then you doesn't matter the auction methods, but there was parachains happening, auctions happening all the time, and there'd be like 5 or 6 companies that go in each auction slot, and then one would be picked as a winner, and then off it go. That would develop, and they would then have that parachain slot for 6 month blocks. Typically, everyone will sign up for 2 years, so you'd have 6 months 4 times to get you 2 years. Now, that actually was a bit of a flaw, and that's one of the reasons why I didn't go down that route in the end, because you're locking up your own DOT for 2 years. Now, at the time a lot of these parachains launched, DOT was at $50. So, people were locking up their DOT at $50. We're now sub $5. It's had over a 90% correction, but their DOT's still locked up. They've never been able to sell it. Now, to reward you for that commitment, you were given the native token. You were given 30% up front, and then 70% would be delivered to you over a period of time, over the 2 year period, or 96 weeks. And that just didn't really appeal to me. And I think that put off a lot of other people. It didn't just put off individuals wanting to invest, though. It actually put off developers, because you got that high barrier to entry. And if you didn't have a particularly large following, you couldn't get the amount of DOT required to even be considered in an auction, you weren't there. And suddenly, Polkadot are faced with just turning away potentially excellent projects just because they don't have a good following or don't have a decent marketing team. But the other barrier to entry there is you may not need that computational power for 2 years. Why sign up and have to pay all of that if you only need it for 5 months, 4 months, 1 month? It doesn't matter. So again, people just weren't necessarily interested. And so Gavin is proposing that we totally reconfigure all of that. And we don't think of them as parachains anymore. We think of it as core time. So how Polkadot worked in the past, it's computational power of the network, and it effectively allowed for 50 chains to be running. So I should go back to this drawing. So you got these little red boxes are like the parachains, if you will. So feed off the relay chains. There's an equivalent of around about 50 parachains that would be available. But it was very inefficient because you weren't necessarily, although you were siloing off some computational power, that might not have actually been used 24/7. And so you might be siphoning off an allocation of computational power that only 60% of it was utilized. So you were wasting that 40% because it was with someone that had already taken it. So Gavin's trying to reinvent all of this and change the mindset of it. Is now actually you're looking at core times of an overall supercomputer. And if you can imagine, that overall computational power of Polkadot in the previously, how they siphoned it was only getting 50 parachains. Well, now he thinks you could get anywhere from 500 to 1,000 cores. So suddenly that huge 10, 20x capability, because you're not siphoning off everything in one large go. You're just, lending out your computational power as and when it's required. So I don't know, if someone comes along and they take a block, but they only need that block for 4 weeks, and off that 4 weeks, they only need 60% of the time, they're not keeping the other 40%. That 40% is given back to Polkadot for them to allocate to someone else. I'm probably explaining this really badly. Please watch the video. And the mechanism in which you can now go about doing this, let me just get my notes again because I don't want to get it wrong, is that this, how can I put this? You're not renting it for 6 months periods. You're actually renting it for a 4 week, a monthly period. And so you can do it one of two ways. You can just take an allocation for 4 weeks and that's it, you're done. Or you can do like what the Parathreads was and take it as a pay as you go. So you're continually updating 4 weeks. You run out, you take another 4 weeks, you run out, you take another 4 weeks. And there's two effectively different versions, a bit like the Parachains and the Parathreads. Now they've got the bulk and what did they call the other one? I can't remember. I'm sure I got it written down somewhere. I have, but I'll have to find it. But yeah, so that's the way in which I can't find it anywhere, annoyingly. So that's the way in which you can look at it. A very good idea, very simple idea of just reinventing that. But what you've suddenly got now is these smaller people, they don't need the backing of a community to take the huge burden of a 2-year commitment to a parachain. They can come along with their smaller budget and they can just take the computational power for 2 weeks. Now, he goes on to talk about how actually this block time, this bulk core time, it's a non-fungible asset. What's a non-fungible asset? Another word for that is an NFT. And so as long as you're not using the core time at any particular, exactly the same moment, then it's non-fungible. And so what you could have is that portion, that 4-week period, if you're a really small project and you really don't need it, you could have 2 projects teaming up together and taking that computational power together and splitting it however you want, using the accords, coming up with whatever agreement you need, and just running it that way. And so again, we're opening up the barriers, or Gavin and Polkadot are potentially opening up barriers to entry, which were previously there. So I think a positive step forward. Let me move on. Okay, so the relay chain. Right, this is where Gavin comes into his own in terms of some of the artwork that he comes up about. So again, there's a good little note about what he wants to do. So I've just talked about core time, pay as you need, all that kind of stuff. But he also talks about, is it going to? No, he doesn't. So talk about the relay chain. So as I said, Polkadot 1.0 looked, let's just zoom in here. This top left-hand sketch, and he says in the talk he did this 30 minutes beforehand on just the back of a piece of paper. It kind of looks a bit like toilet paper, actually. But with a bit of biro, off he went. And the top 2 are how Polkadot 1.0 works. You've got the relay chain in the center, okay? And you got these parachains on the outside, which is very much like what this is. Now, this used to be on the front page, but I think they're moving in the direction that Gavin's talked about. They've removed it from the front page, and it's now you have to go into here. So, but you can kind of see how there's the relay network. Here's the parachains, looking very similar to this. And you can use that XCM, so that cross-chain mechanism or module, whatever it is, to talk to each other, to talk to the other parachains, and then to bridge out and talk to other networks. So that's how it works. What he's saying is, from a user experience, that's not necessarily really what you want. It's quite clunky in terms of it's focused too much on the cores and not on the individual apps themselves. And so how he sees Polkadot is now going to be this bottom left. So the Polkadot, the relay chain, encompasses everything. And each of the cores, they're not chains anymore, they're not those silos, each of these core computational times live within the relay chain. And these dotted lines here, effectively ones that are relatively similar to each other. They don't have the exact same rules, but a user, when they're coming in, yes, they care about the security. Yes, they want to make sure that they're not going to be any problems with resilience or anything else, but they want to have a seamless experience. And by having everything sitting inside the relay chain as a starter, it makes it more application focused in the first place, and therefore the end user's experience is near seamless. And he talks about the example of a smartphone. You've got your overall smartphone and you can just flick between apps, and there's very little jutta time between them. They still stay live and open. They still work in the background. Some of them can talk to each other, but you can move around seamlessly without any problems. And that's where he wants to see Polkadot going. That's where he wants to see the focus driving towards. So kind of it's not changing the consensus mechanism as such. It's just moving the focus, getting away from, the irony is that Polkadot was created to bridge gaps between silos, and then they created a system which created silos naturally. And I think they've probably learned from that and gone, you know what, we really need to make this interoperable internally as well as externally. So that's what he's looking to do. And then the final thing he talks about is this creation of accords. And I have to say, I think the best way of explaining it would be that digital handshake. So it allows the XCM communication channel between parties. Now, I've said in my notes here 2 parties, but it could be any amount of parties really. But to develop and agree their own set of rules and their own boundaries of how they can interact with each other, how they can operate with each other. Now, it doesn't necessarily have to be 2 small entities that want to use the same amount of core time. It could be people that have huge amounts of core time, but they want to have a relationship that lives within these dotted lines. So similar kind of agreements and boundaries within there, and they can work closely together. And they can come up with those themselves. They can agree them. They can shake on them. And it effectively makes some sort of permissionless, immutable kind of relationship between the amount of parties that there are. Don't really see it. Well, he goes on to say it's unique to crypto at the moment. You don't really see that kind of arrangement and understanding anywhere else in the space at the moment. I can't verify whether or not that's true, but hey, all trust in Gavin. And you can set it up. Also, you can't set it up seamlessly like that between 2 layer 1 networks outside of Polkadot and outside the XCM. So this is obviously what Polkadot can then look to expand upon and bring and bridge out to other places. So yeah, what was I going to put here? This is all just my actual notes that I had spoke about. I'm just going to see if I can find. So I should have just read this script to you. It actually came out a lot better than what I was talking about. But anyway, I think what I'll just do to summarize again is just to emphasize that this isn't, painted on now. This doesn't mean that what he has gone on and talked about is exactly what's going to happen. It's something that he is looking to develop and propose. And you think about it, this is 2 months old now. So hopefully they're well on the way in trying to adapt where this is going to be. I haven't even logged on to Polkadot to see if anything's ready for any review at the moment. I'm sure I would have seen something if it had. But I just think it's some positive steps going forward. And I implore any crypto, whether or not it's Polkadot, whatever, utilize bear markets to improve so you're ready for the next bull market. And it's good to see, good projects do that. Bad projects don't. And so the fact that they are evolving, taking that stock, I think is a very positive sign. I think this is only going to help Polkadot going forward. One of the things I really hoped he was going to talk about, but he didn't talk about, because you've got this core computational time and there's an opportunity for, paying for all of that with DOT, is maybe trying to introduce a burn mechanism. It's a certain amount of DOT that's used for transactions fees is burn. Try and get that inflationary token down to a deflationary token. I'd like to see that introduced. That has been talked about by other people. It just wasn't mentioned in Gavin's keynote speech, but I really hope that they try and bring that in. I think that'll be another positive step forward, a huge step forward. So that's something that I'll look for. As I say, I'll post this in there. And yeah, I hope you like. Right, let's just move that down. Let's bring the other one back up. This one. And let's just have a look at the comments. I've been loading up on DOT for over the past few months. I think it's got a lot of potential for the bull. Yeah, I agree. It's between DOT, Bifrost, and Glimmer, I'm pretty exposed to Polkadot at the moment. So I need Gavin to deliver on what he says he's going to do. But I really do think it's got some amazing potential. I think, addressing the tokenomics would be a huge step forward. But even if they don't, I do think that it's still got a great potential going forward. I think when you look at things like Moonbeam, Centrifuge, some of these other ones that have been built off it for a while, I think they're making positive strides. Yeah, from the price, they're all getting battered, and I get that. But they're still developing. I'm hoping, it is a hope, let's face it, that hard work is going to pay off the next bull run, and adoption is going to really pick up from that. Reese has put, signposted that the HNS on CAS was extinguished at 32, but offered no explanation. To me, it's now cobraing off the neckline of the daily and still screaming to fall. I will talk about CAS a little bit later on, Reese, but I know which post you're talking about there. Right, so let's just quickly talk about bigger picture Bitcoin in terms of price action, what I'm looking to do, and why I think Bitcoin had legs in it even before the news that was launched today. And it actually goes to Bitcoin halving cycles. And this title here, smart money looks to buy the rumor. So that remember the saying is buy the rumor, sell the news. And so it's okay, when it does the rumor start, and what we're talking about, the rumor is the Bitcoin halving, the rumor event leading up to that. When does that start? We need to kind of work it back then, don't we? So when is the Bitcoin halving scheduled? I think it's this one here. Here's the countdown clock. So that's funny. When I looked at it earlier on this afternoon, it was the 13th of April. This changes, fluctuates all the time. Let's just call it mid-April. So we've got September, October, November. I'm going to use my fingers here. September, October, November, December, January, February, March, April. 8 months. And not even that. 7 and a bit months. So, 220 odd days we've got until the halving. And now we're over 220 odd days into this year. And how quickly has that flown by? And so suddenly, actually, we're getting to the point where we've been in a bear market for so long, we've got to start to shake it off. And start, if you're on the sideline, absolutely fine. Well done to you. You've weathered a decent amount of storm there. But don't get caught in the bear mentality forever, because if you're someone like me that believes in the 4-year cycle, we're getting close to that. Then you throw on the back of that the likes of BlackRock, the likes of Valkyrie, the likes of Grayscale, ETFs, institutional money. This wave is coming in for a reason, because people believe the halving is going to be the next kickstart to the bull run. And so we've got to start to think about, well, when is a good time for that to get in? Now, Whether or not this article is right in that Q4 is going to be when smart money starts to plow in, that may well be the case. Why do I say that? Well, let's have a look at historical data. We're in August 2023, so just zoom into this again so we can all see it a little bit better. And this was 11% earlier on today, and it's now, actually, let's just refresh it. It might be different. Yes, so it's 4.59% now. So, today's pump has really helped. But generally, August has not been that great a month for Bitcoin. And it's either just limped over or it's been heavily in the red. And we've got a couple of days left to go, but we have still had a bit of a downturn. But we're going into September, which historically has been a horrendous month. As a matter of fact, we've not had a positive September since 2016. And even the 2 positive Septembers we've had have only yielded a 5% uplift. The chances are we're probably going to have, going on historical data, a pretty poor September as well. Okay, so that chalks off another month. So now we're sub 200 days. We're 6 months out from the halvening. When you get into things like October and November, and we talked about this last year, which came true, you have this Halloween effect where from sort of the end of October into the last quarter of the year, it seems to be a very positive effect, not just for cryptocurrencies, but also in the stock market. And again, we generally see that. And, we've got some pretty big green candles here. Yeah, of course, we've had some bad ones as well, but there's more green here than there is red. So on the balance of things, it may well be that starting to think about moving in October, November, December may well be the right way to take it. Because when you go into a halving year, 2020 was the last one, March, obviously, that was a COVID crash there, but it's still red. But we bounced back hard the very next time halving happened in May. Positive. We go back to 2016, 20, okay, down, 7, 18. I think it was June this time, 27. It might have been end of May, that one, and 27. Off it went. So really what I'm trying to get at is we've done it. We've done 21, 22 months of a bear market now. I've obviously been getting in, but I actually need the Santa bounce. Yep, that's the other term they use it. So the Halloween Halloween rally or the Santa bounce. Santa bounce? Santa bounce. You're right there, Ryan. So for me, when I talk about Bitcoin, it's still got some fight within it. I'm not talking about today, tomorrow. I'm talking about it when we're looking at it from a monthly point of view. Yeah, we may get a bit of a kick in next month. It's highly likely that we will. Whether or not we see 23,000, whether we see sub 20,000, I can't tell you. But by the time we get into October and November, I want to be getting into a position where I am pretty much fully in, and I'll just ride whatever pain there is, because, before you know it, it's going to be less than 200 days, and then it'll be on us, and we'll be there. And I want to be positioned so that I can either take advantage of a buy the rumor, sell the news event, or I'm just positioned to get myself, because your job to your future self is to, accumulate as much as you can prior to the next halvening so that you can then sell it 2024, 2025, 2026, whenever the next top, or let's face it, we'll miss the top, but whenever we start to realize that we're moving into the next bear market, and we're getting close to that now. So don't just be constantly thinking perma bear if that's where you are. Now, I got caught out by news like today. Of course I did. But I tried to stress at the beginning, as positive as that is, it actually, there isn't a spot ETF approved. Now, come Friday, there might well be. So, we could see a double kick this week. Or we could just as likely see positive news, market makers moving the price up, trap people into long, sentiment has changed, and then they're going to reverse it and we get stung in September. That's just as likely to happen as it just continuing up. So we'll have a look at price and everything else a little bit later on, but I haven't reacted to what's happened today, despite me exiting the market with some altcoins last week or 2 weeks ago. I'm just going to wait and see. And if I have to take a tiny little bit of a hit there, then fair enough. But yeah, I do see that we are getting close, for me personally, to actually be that 80, 85, 90% in the market. I'm always going to leave a little bit out for new projects, give myself a little bit of wiggle room later, maybe even start thinking in 2024 about dusting off the old Bybit account and starting to do some trading again. But yeah, that's kind of where I'm at. That's why I see where we're going. Speaking of Bybit, I didn't mention it in the news today, but Bybit, someone withdrew $360 million worth of Bitcoin today prior to the news announcement from Bybit exchange, spot exchange. 1/3 of their entire Bybit amount of Bitcoin was taken off that exchange today. Let's see if I can find it. Let's have a look. Bybit. I wish I'd kept that news article open. Bybit Bitcoin removal or withdrawal. But yeah, someone moved, I think it was like 12,700 Bitcoin off the exchange today, which is crazy. Can't see it. But yeah, so, one, people are still removing crypto off exchanges, which goes to show typically that happens, the bottom end of bear markets before bull markets, people are taking their stuff off there. But had you had your Bitcoin, your paper Bitcoin on an exchange and someone withdraws 1/3 of it, you're damn right, I'm sure there was some suspension of withdrawals of Bitcoin whilst they tried to recover and get over that. So it's just another comment that not your keys, not your crypto. Once you bought it, if you don't need it on an exchange, get it off an exchange. Okay. Can't say that one enough, but trust me, yes, you may have to pay a small amount of fees, but it's better than your Bitcoin, inverted commas, being sold 2, 3, 4 times by an exchange, and then all of you have a mad rush later to try and take that one Bitcoin off. Okay, right. Enough of that one. I want to talk about the research token. Actually, let me just see if there's any questions. Santa bounce, that was the last thing. Okay. So, research token. If I can find it. Manny, I don't know if you're watching live or if you're watching on the catch up. You've asked for this repeatedly, so I personally apologise. I think the first time you asked for it was in March, but we finally got around to doing it. And yeah, hopefully I will do it justice for you. So, Relio, what is oh, you know what? This is why I haven't prepared. Anyway, whilst I'm doing this, I will just chat. So, Relio is what Simon was talking about last week, a real-world asset project. Okay, so that is tokenization of real-world assets so that they can be traded digitally. Now, whether that be things like bonds, whether it be physical assets such as gold or building or potentially art. I know Simon talks about houses and all sorts of other things. Yeah, now, why am I opening up all these news articles? Don't worry, I'm not going to go through it. But it's interesting. Going back to the beginning of this year, Larry Fink, CEO of BlackRock, talking about the next generation for markets is the tokenization of real-world assets. Okay, we've got Citi saying trillions in assets could be tokenized by 2030. Real-world asset protocols are actually outperforming DeFi blue chips due to tokenization wave. That was earlier on this year. So more and more people are starting to engage in this, starting to look to do this. Oh, did I open that one twice? I did. In Australia, their stock exchange is considering listing tokenized real-world assets. They haven't done it yet, but they're already considering that maybe that's an opportunity to do that there. Securitize issues tokenized assets in Spain, so they're looking to do this in September, so that's only a month away. So again, Spanish real estate also looking at that. And then there's an article here, which I'm not going to post the other ones. There's an article here just about how real-world assets could potentially work and what that means, and I think it's useful for people. So we know that real-world assets and the tokenization of real-world assets is definitely a thing. It's some of the biggest institutional companies, banks in the space are already looking towards that and already see a future within that. And so it's interesting that Relio is one of the ones that we come across. Now, I'm going to start off with this. I think this is an incredibly poor website and an incredibly poor website. And that's a real disappointment here because it annoyed me and put me on the back foot straight away. This is just a dull website, but worse than that, it's just full of buzzwords and no actual concrete information. And one of the problems you've got is for the average investor like me, like you guys, who is not necessarily into understanding a lot of these tokenization, real world assets. I feel the onus is on the project to easily explain to me what it is that they're trying to achieve. And unfortunately on this website, they don't. It's not covered anywhere. And there's very few videos about that. And so that does put me off immensely in terms of where this is going. So, normally the first thing I'd do is there a problem that they are trying to solve? Yes, there is a problem they're trying to solve. Is Relio solving it? I have no idea, unfortunately. I mean, I kind of do, but it doesn't explain to me how they're doing it. So it talks about that the future of private equity is digital. Great, okay. We're eliminating barriers to invest in, trade, and leverage exclusive real estate, private equity, and other real-world assets through decentralized finance. Okay, but what is it that Relio are actually doing? So at the moment, all we know is at some stage we can invest, trade, and leverage trade real estate, equity, and other real-world assets. Now you click Go Get Started, and this is, for me, I can't do it. It just will never connect for me. So I'll stop that now. Now I have managed to get in on it, and I'll have to do it through my. Actually, I'll load this up whilst we're talking. See if I get the history open. Sorry. So that's quite disappointing. And it kind of talks about some of the stuff here. So as I was reading it, I kind of got excited because it says we provide down here. We provide SEC compliance enabled technology to maximize liquidity through peer-to-peer transactions within a network of whitelisted investors and liquidity pools. So two things here. One, SEC compliant. This sounds great. But actually, it's SEC compliance enabled technology. SEC hasn't said shit about whether or not Relio is SEC compliant, is not security, whatever it is. And then through peer-to-peer transactions within a network of whitelisted investors. Okay. So we've got whitelisted investors. We'll have a look at that a little bit later on, and liquidity pools. And then it kind of goes down. It gives you some vague examples of what they are doing. So there's a 250 million credit fund tokenization and white label platform called Volantis Digital. So they're teaming up with Volantis Capital Management to create Volantis Digital, an institutional portal for tokenized private equity vehicles offered by VCM. Well, I'll save you the if you go to that, it's not up and running yet. This is it. So it doesn't have that. It's advertising. It's the first thing, but everything on here just leads to this page. So you can just join a waiting list. So it's got nothing there, unfortunately. But that's okay. I'll put all this to one side, and I'll try and understand about what it is and where we do it. So I've gone to resources and education, tools and guides. I'll find the white paper and I'll read through that. Resource library, perfect. Scroll down. It's got one thing in the resource library, and that's an architect guide to building in the metaverse. I mean, what is it that Relio does? Real world assets. And the only thing that they can talk about is the bloody metaverse. I'm trying to get away from a digital landscape. I don't bother about the metaverse. We don't stay in our homes anymore. I want to know about real world assets, and the only thing they can talk to me about is the metaverse. And so I'm a bit confused as to what it is that they're trying to advertise here. But it's just a blog post, it's nothing there. But ultimately, there's no other documentation. So there's no white paper, there's nothing about how to or what it is or where it goes. So I'm left, scratching my head like, well, what am I going to have to rely on here? I thought, right, well, I'll go to YouTube and I'll find some videos. Nobody addresses this problem. All they talk about in the videos is price and where it can go. I think the prices are probably a bit unrealistic. But anyway, I digress. You can probably get a feeling that I'm not a big fan of this project, but they have brought it upon themselves, because if they don't give me the opportunity for me to educate myself, I'm not going to invest in something I don't understand. And I can't understand it unless they give me the information. So, we're left to bumble around through products, and, we don't know what it means by network because we haven't had a white paper. But you'll be actually, now we're starting to get of it, because Relio, it is a layer 1 multi-chain Web3 ecosystem focus for issuance of management and digitally native real-world assets. What does that mean? It's got a blockchain. Okay, so it is a network. You can connect to your MetaMask and you can sign up to it. So it does have that. You can go and click on explore the network, and then suddenly, okay, we're starting to get a bit of information here. But why is that information 3 layers deep and not under this? We can start to see the price, the market cap. So it's 20 cents at the moment. It's got a market cap of about 15 million. It's got a 24-hour volume of 1.6 million. There's about 11,000 wallet holders. Okay, so we're getting a bit more information. Got some features. Okay, so let's talk about that. So an interoperable layer 1 multi-chain Web3 ecosystem focused on the issuance and management of native. We've already read that. It's designed to be fully open source, permissionless, and purpose-built. Well, there's just a lot of buzzwords there. Everything, well, generally, most blockchains are open source, they're permissionless, and they are built for a purpose. So we've not actually identified anything necessarily within that. So security. So how is the blockchain secured? So you've got the validators. Now, again, there isn't a white paper to explain the tokenomics, but I think they have a very interesting tokenomics. They have a 2-token tokenomic system. So if you were to provide your Rio to stake to provide security for the network, you're rewarded with the RST. So it's a bit like Neo and Gas, I suppose. They have 2 stakes there. And actually it's very similar in terms of how transactions and governance and all that are done. But again, I'd love a white paper to at least explain to me what all of this is. Web3 compliant, okay. Governance, so yeah, well, proof of stake. And so we've got some governance and we can do some voting, there's some tokenization, we can stake. And we've got a distributed key management system. But again, there's not really too much. I got excited again because there's documentation. So I've clicked on that one. But this is just all about setting up a node. It's nothing else, There's nothing in there about what it is. And I want to know what's the purpose of Rio. As good as Relio could be, what's the purpose of the token? Because that's ultimately what we're investing in. And right now, I've taken a guess at some buzzword bingo that it's going to be used for security, governance, staking, and then RST is going to be used as a transaction and a payment method, a reward method, if you will. So yeah, so a bit disappointing. They've got a roadmap of sorts. So the network launched in April of this year. But we've got some idea of what's coming. Super staking, don't know what that is. Fee burning, no idea what they mean by that. Rev share, osmosis, multi-chain bridges, develop outreach incentives, but there's no detail in where that's going. We've got a tiny little chart which you can't click on to have a look. But effectively, there's going to be 75 million tokens, and there was a pre-mine. So effectively 45 million are already circulating. When we look at the data on CoinMarketCap, that seems to suggest that's not quite right. So I don't necessarily know if there's any vesting within that or locked up, or if it's, there's 7 million actually circulating and the remaining 38 million are locked up. Unfortunately, I don't know, and I can't necessarily work it out. Yeah, they have a Relioverse, so a metaverse type thing. So you can buy things like digital land and everything else and build off that. There's plenty of other people that can be doing that. Is Relio going to really have the ability to take on Facebook? I mean, they renamed themselves Meta. They spent billions on it and decided it's not gone anywhere yet because the technology isn't there. So if anyone's going to win it, surely it's going to be someone like Microsoft, not necessarily Relio. And I thought they were dealing in real world assets, and all we're really seeing at the moment is their metaverse side of things. So again, unfortunately, a little bit disappointing. I've probably gone a bit off topic, so I'm just going to see what else is here. That's the same ones. We'll close that down. Okay, so I did find this. This is the Medium article. So it was written in 2022. It's not, I don't know who this person is, so I don't know if they are affiliated with Relio, but it does actually start to give me a little bit more information. So it is an ERC20 token, and there's a contract address. Unique selling points: a proprietary layer 2 blockchain distributed network for issuance and interconnecting decentralized ecosystems. Okay. It's modular with fully scalable, a unique investment platform which allows liquidity. So I'll show you what that is. That bit which I couldn't join, there is actually a platform you can do. Users can tokenize various asset types. So what I'm assuming is that if you did say have a building or some bonds or whatever, and you wanted to tokenize it, I'm assuming you need to have Rio, the token, to do that. And then, but I don't know because I don't have a white paper. No one's explained it to me, but that seems like the logical sense as to why they've got this token is you utilize that to make the transaction or to divvy up the value, the real world value of what that is into a certain amount of tokens. I don't know, but we'll just have to wait and see. There's a bit of a diagram of sort of how it works. So this DEX, which I'll show you a little bit later on, these are all the opportunities that they have available to you. Now, what is interesting is you absolutely have to KYC. And so I haven't gone that far because I didn't really want to KYC on something that I'm not interested in. But if you want to have opportunities to invest in some of these real world assets, you have to KYC, which is very anti what crypto is all about. That push for decentralization. This isn't. This is very centralized. The other interesting thing is that their web wallet or desktop wallet, whatever, it's non-custodial. So you don't even have the keys. Now, you can change that through the settings, but the default is it's non-custodial. They look after the keys for you, but you can change that and get your own keys. But the fact that that isn't the first thing you can do, it just doesn't feel right to me. Unfortunately, these are some of the change, the interoperability it was talking about. So Stellar, Fusion, Binance Chain, Algorand, Ravencoin, Ethereum are all ones that it can interact in and out. So it talks about the interoperability. I just mentioned the changes there. Talks about decentralized exchange. I mean, the fact that you have to KYC, I don't feel it's decentralized to me, because they have to know everything about you. So it must sit on this side. There is some token allocation of airdrops and then what's left in the market. And then it's got Rio and RST. So that's the staking one here. This is the main one, but I can't tell you anything about it. I'm sorry if I'm sounding like a broken record, but I can't go into the detail that I would like. Prime Trust are backing it. So they are providing the insurance within that. It's one-to-one redeemable with USD. Okay. The team is doxed, so you can go through. I have no idea who any of these people are. The venture capitalists, there are a few in there, but none that I've really stood out and gone, oh, okay. And this roadmap's from 2021, so it didn't really count. That's just if you want to set the node. Okay, so what I thought what would be great is there an explorer that you can actually have a look at? If you go to CoinMarketCap, sorry, I'm jumping around here. And network information, because remember, this is a blockchain. It should have its own network information. I won't bother opening it. It's just a run-of-the-mill. That's not what I wanted. Stellar. It's based off the Stellar, but it just doesn't give you much information. I can't tell you about size of wallets or anything else like that. I mean, yes, okay, it does update transactions and everything that we can see here, but I don't get a feel for how many it's done and what it is. So I don't know. There's some information there, but it just feels a bit lazy, that it's not as all singing and all dancing as potentially like it to be. This is if you want to join the metaverse. I didn't click on it. Sorry, you guys will have to have a look at that if you're interested. So I found this on Twitter. So Relio reposted this. So this gentleman, could be a lady. Relio is often overlooked because not many people understand it. Well, if you'd updated your website, maybe they would. So here's a thread on it. So the network has launched, so that's the 7th of April. We know that. Proof of work, it's built using the BTF proof of stake consensus engine, which is a secure, scalable, and energy efficient algorithm. There's nothing unique about that, because that's what most proof of stakes are. Validators who bond native Relio or RST can participate in the consensus process by broadcasting votes. Okay, so it's used for governance. Is it network Web3 enabled? It sure is. Web3 is a term coined by Gavin Wood. So that's not really an answer. I mean, I'm not saying that, this person could know next to nothing, but the fact that Relio retweeted it just gave it a bit of substance when I was searching for it, I suppose. Will it enable Web3 dApps? One example being the base layer for the real base world metaverse, the Relioverse. And again, it just winds me up, that mixed message. I'm sorry, just if you're real world assets, just make another project that interacts with this, that talks about the metaverse. It just doesn't feel right. But anyway, it's there. Who controls it? Validators. Yep, so it's proof of stake, same sort of thing. I'm not going to bother going through them all. I'm sorry, I'm maybe feeling unenthused, but I just couldn't find the enthusiasm to particularly get into this. Maybe I don't understand real world asset tokenization as well as I need to get into it. But the fact of the matter is they ain't offering much, and they ain't offering any information to find out about it. So why bother investing in them? In terms of the price, I mean, it got up to $5 when it first launched in 2020, but since then it's sort of resting in and around 20 cents. Markets it's on a couple of exchanges, and decentralized exchanges. So we've got OKX. In terms of liquidity, the majority of it's on Mexi, but it's just over 500,000, so it's not a huge amount. So if you are buying a bag, it might be difficult to move it later on. Let me just open up this bit. So I could open up that bit that I didn't want to, that I couldn't when I was using Chrome, but I could through Brave. So anything on here? No, not really, dismiss that. So this is like the DEX and the desktop that you get towards. So I've set it up with an account, but I've not KYC'd. So if I click on investment opportunities, will it allow me to do it? Here we go. Let me just sign in. Sorry. Can't remember what password I used earlier on. Got to find the stairs. I worked in construction industry for almost a decade. I still haven't really worked out what the difference between stairs and steps are. One's inside and one's outside. It's about as close as I got to it. Jesus. Okay. Sorry, it's now sent me an email to verify. Within a second. Okay. Sorry about that. Make sure there's no further step. It's taking its time, but okay. So we're back to where we were here. So this is what you get when you're on the DEX, and the opportunity to swap, have a look at your wallets, go onto the network, or investment opportunities. I thought, well, great. We can now finally find out what we can invest in. So this is where you're at. Now, remember we talked about that first page, a wide range of white papered investment opportunities. Well, there's 3 right now. This one's closed, so the project's raised it, so you can't do much on that. Same with Liquid Mining Fund. So what they've done here, this is a company which has Bitcoin miners. So that's the real world asset. And then there's another token which you can invest within. And then there's that Volantis Digital, which is coming soon. So you can't yet look at that. But fairly certain, if I click on this, here we go. This project has been closed. In order to review documents, you will need to complete KYC accreditation and sign the NDA. Once you've completed those steps, you'll be able to look at the offering materials. So because I haven't done that and I haven't signed an NDA, I can't even go in and have a look at what it is they're necessarily trying to do. So this seems to be, and maybe that's how it's going to be for all real world assets. I don't know enough about it, but this is not something you can necessarily get into, certainly in this project, unless you are willing to KYC. Now, I've KYC for just about every exchange I've got, so it's not necessarily that I'm not willing to do it. I only do it when I absolutely have to, and I don't really want to do it for this because I'm not that necessarily that invested within it. But if any of you are and you do it, I'd love to see what information they give you and how they break down what this was and how you can invest within it. Now, it's obviously already closed. All you could see at the time was there's a sale price of 1, and the minimum you could invest was 1,000. Let's have a look what the other one was. It's loading up. It didn't say, so I'm not sure. But yeah, close that back down, get back over to here. In terms of its actual price on the chart that we can have a look at, let's just put it on the 3-day, just so we can try and get it all in. It's kind of looked like many other altcoins in that period. So last year we had the bottom around about the FTX crash. It's had a decent climb back up. I mean, it got all the way down to 1 cent. So it's had a hell of a climb, 20x from its bottom. And it's held that fairly decently. Rise 1, rise 2. Maybe it's looking to get onto a rise 3 to come back down. So, it's potentially some opportunity. But I would more look at that from a trading point of view rather than an investment point of view, because I just don't know enough about it. So for me, this is a hard pass. It's actually an easy pass. I'm not invested in this. I don't know enough about RWAs, and even if I did, this site doesn't give me the information I need to satisfy myself in terms of doing it. And the fact that I can't have a look at tokenomics, I can't have a look at white paper, I can't see what they invest in. It doesn't particularly seem to have many investment opportunities at the moment. It just, I'm going to wait. I think we're too early. I think real world assets will be a very positive step forward. Whether or not we're too early for this next bull run, I think we probably are. And it might be something that we're looking to revisit 2028 onwards, when there's a lot bigger players within there and people are trying to utilize and tokenize a lot more assets out there. But Yeah, so that's my views on that. I'm not sure if it did help at all. And Manny, I know you've asked for it quite a lot of times, so hopefully that helps, but that's just my honest opinion on where it is. Right, let us close that down. Let's get back to the original. So yeah. Okay, Reese. I'm not sure if you're still on, Reese. I saw you mention something earlier. I got your question. I'll be honest, I'm not sure I get it, but here's the question. Looking to tweak my dollar cost average strategy. I'm currently doing weekly buys starting 25 weeks from all-time high and possibly a dollar cost average sell from 50 weeks into the bull phase. Then sidestep 25 weeks and repeat. So I've kind of drawn that, what I think that might be. So 25 weeks from all-time high. So did you start buying in weekly from the 9th of May last year? Is that what you were trying to get at? And if you have, well done, because okay, you had 1 week, which was pretty painful, but, except for the first month of doing it, you've generally bought completely underneath. But then it says to sell 50 weeks from the bull phase. I just don't know what you mean by the bull phase. Is that when the halving is, or is that from when we had the first uptick? And if it is the halving, then that's going to be, I said it was April, let's just say the 15th. So 50 weeks, you'd be selling, so 50 weeks from there, so you'd start selling March 25, which, could be a good play in terms of if we think it's going to be winter here, then there's, oops, my arm's disappeared, and there's certainly an opportunity. No, I understand. Okay, right. So I think I understand Simon's. Where did I've got that a little bit later on. I must have skipped over it. It's very similar to sort of this one here that I've sort of used in the past. He's just extrapolated where it's going, and he thinks full time ends. So you're just using his dates. That's what you're getting at, which is fine. Okay, I think he's got his line there of where he thinks the end of the bull market's going to be. So okay, for me, it seems a sensible strategy. Any strategy which has you actually having a determination of taking profit, I think is always going to be a sensible strategy. Not having a strategy that involves when you sell often ends to you missing out. Now, so yeah, I think that works. Now, without going through Simon's chart and actually looking at the exact figures and the dates, I don't see any problems within that. 50 weeks into the bull phase, I would just see how close that is. If you're confident, there's one thing to sell early, to sell, but to sell too early, you could be kicking yourself. So it's about how much you're going to be selling. You're going to ramp it up. Is it just going to be a couple of percent to start off with? And then as it gets closer and closer to December 25, you're going to be ramping out to 5-10% each week or whatever it is. I think that needs to be fleshed out. But this is a decent backbones of a strategy. In terms of what my current strategy is, I just buy monthly. I've been buying monthly the first of each month. So I was getting pretty darn excited when we were down here a second ago at 26,000, thinking, great, decent buy. And then, 3 days time, I'm going to be looking to buy again. And we don't know where the price is going to be. But that just is what it is. In terms of, that's how I DCA. In terms of actually an actual spot buy outside of that, I'm just going to wait to see what happens. Certainly with this candle, certainly with Friday, and then what happens in September. But ideally, I'd like to be buying down here. We'll get to that chart a little bit later on. But no, I can't fault that you've got it there. In terms of the weeks and the periods, I don't necessarily know, because I've not got Simon's chart up, and I don't want to waste anyone's time just going through that just now. But I like it, and then you're going to sidestep for 25 weeks and repeat. I think that might be a bit short. If you just look at the history, just go back onto my chart. This fall, the last few times, has been a year. So it seems like it'd be better to sidestep for 50 weeks and then get back in. That's certainly sort of where I probably could have done a bit better. I didn't get out straight away there, so it wasn't quite 50 weeks, but I did start getting back in properly in November, December, so that kind of ties in. So that's just the only thing that you may want to look at. It's just when you get back into rinse and repeat. And the other thing you just need to think about is what's is this going to be the last real big hurrah for crypto before it gets a bit more stabilized once institution money gets in? I don't know the answer to that at the moment. So, yeah. I hope that one helps. The Bitcoin clock's definitely an interesting one. We went over that a couple of weeks ago in the video. If you haven't seen it, I'll dig it out and check it out. But I went into it a bit of detail. I know Simon posted a picture of it, but I kind of tried to go through and explain each of the areas. Yeah, so it's definitely a good source to use. It's something that I'd never seen before, but I think it visualizes it very well. Anyway, right. Start just talking a bit about price, and I'd like to kind of be on the next 10-15 minutes if I can. So this is what I posted in Discord, what feels probably about 6 or 7 weeks ago. It was here. So yeah, 6 weeks ago, 17. I actually think it's earlier than that because that's when I went on holiday. Anyway, no, it wasn't. I've got myself confused there. But we broke that, which we talked about last week, and it's now, where are we doing? Well, for me, everything that's happened on this and the narrative I've got still stands despite what's happened today. So a break of this, and I do think we're looking at that major reversal. And what we've actually seen at the moment is today, and you know, we're only a couple of days into this weekly candle, so anything, can happen. But we're already starting to run in to the 21 EMA on the weekly. And it's interesting that that's where we pull back now. I don't even count this candle just yet because it hasn't closed. But looking at the liquidity levels, I updated these today. And these are still areas, and we're kind of equidistant now between the two. But if September is going to be as bad as it has been previously, and you're looking at that 13 to 18% drop, then that is an area that I'd certainly be looking for them to target. Now, I know that on some charts, this wick went a lot further down than 25,300 last week. It's just the chart I use, it didn't, for whatever reason. But it didn't touch, I've adjusted it so that this liquidity area is what it didn't touch when some of the other levels went back down. So I'm still at the moment thinking that that's where we're at. In terms of market structure, let's just have a look here. It's on the daily. So last week I was kind of explaining why I thought this was an M formation, and then we dropped back down, and this was potentially part of drop one. Now on the daily chart, that's still in play. You know, it's consolidating. Yeah, I know it jumped up there, and that, whilst that's unusual, it's not unheard of. But it's run into the 50, so it's pulled back to that 50. So this could still be that consolidation period before a further drop back down. But what I will say is, if we have a look at this on the 4 hour, have we missed actually some sort of, you know, M over here, and then we've had drop one, consolidate, drop two, consolidate, drop three, into a W formation, and we're out. And this is rise one on the 4 hour. So now we've got consolidation before further rises. Get rid of that. Get rid of that and that, so I can draw this a little bit better. So have we actually got some form of, you know, if this is where it's going to consolidate, and then we're going to get another rise up, more consolidation, another rise up before an M formation, and then back down. Potentially. So the 4 hour could be suggesting that that's what's happened. You know, we have run into 200 and the 800. We've kind of turned ourselves around there. These vector candles, these were sharp. You know, these were strong rises, that 4 hour. It's actually over 1 hour that happened. So, you know, it's a pretty tasty move. And I do think that, you know, even if this is a consolidation before a further rise, we're going to eat back into this. That move was too sudden for us not to get there. And this level, the 50% retracement of that vector, is around about 26,700. So I wouldn't be surprised to see that over the next couple of days. But it is interesting that maybe that plays out, and that is an M, drop one, drop two, drop three. But that does feel like a W there. Right, let's get back onto the daily. Let's get rid of that. But also, what you can say on the daily is we've got to 50% of this retracement of this vector candle. Now, until this candle closes, this box is going to remain there. But once it does, you know, we only have a small smidge of that left, and it's already recovered all of that. That's not unusual for it to do that. If this is continuing down, you have to retest that 50, be rejected from it, and then fall away back down. So that's kind of why the timing of everything may just be trying to, you know, be a bit of a squeeze, you know, trap some liquidity in there. With, you know, there's going to be an awful lot of longs that have been built up here. Market maker filling their short positions. They're going to want to get paid, and that's not too far away down there. So for me, that's something that I think we need to look at. I'll come back to Casper in a moment. There's not too much to say on a lot of the other ones, just because they've all had that move. They've all had a decent move. You know, 2, 3, 4, 5% is generally what we're seeing at the moment. And so, yeah, you know, they're kind of all on the daily running into areas of either 50% retracement of the fall or the 50 EMA. Binance, you know, I can't speak today. Bifrost BNC is one of the ones I sold. It's actually less than what I sold it for. This is one of the only ones that is. Link is another one I sold, but unfortunately I sold that around about here. It's about 613, so that could have been a better position for me, but you know, it's not too far away at the moment. It's still kind of in a downtrend. It's not cleared a lot of noise up here. It's got pretty much every candle for it to get through on the daily, the 5, the 10, the 50, the 200, or the 800. So I can still see that one coming back down. That's the same with a lot of these alts. Whilst they have had that pump up today, you know, they've not cleared the noise before, and actually we're starting to see that's falling away. And if we have a look at Bitcoin dominance, yeah, it was resting at 49. And when I looked at it before, it was just touching 50, but it's actually just slightly below at the moment. But I think there's a lot more excitement about Bitcoin at the moment, which kind of make me wonder, has this move been, you know, forced through leverage trading or actually spot trading? The dominance suggests spot, but has the momentum been caused by leverage moves? So let's have a look at CAS and go back to the question here. Signposted the HNS on CAS was extinguished at 0.032, but offered no explanation. To me, it's Koboing off. So let's have a look at what Simon puts. That was it. This was it here, wasn't it? Open up. So he was saying that it was extinguished here. So if you look at basic HNSs, and assuming this is the right neckline, remember it's from the top of the head to the neckline is the distance again. I don't know if he's in log or linear. He's in linear here. So from eyeballing it, 5.2 to 3.7 is 15, isn't it? So in theory, that could get down as low as here, you know, 2.2. That's the distance we'd be looking at. So no, I don't necessarily think on a linear chart that 3.2 extinguishes it or the move has finished. Let me just go to an actual chart now. Let's go to a 4 hour of it. Tell you what, let's just take these off for now. We don't necessarily need them. Let's draw in here what we were seeing. So sort of something like that, wasn't it? Now, like what you said, we've had a pretty decent, so we've broken through, and now we've Koboed and we've actually hit it, and we've been rejected from that, and there's potential for further falling. Now I have mine on a logarithmic chart. If I take from there to the neckline and I move this down, it's saying 2.6, 2.7. If you remember last time when I was drawing my fib levels, that's kind of what I'm seeing. Now these are all rough ones, so I did it on the daily before, but 2.67 and 0.5. Now if I move this up to here, it's getting down to 3.82. They're all kind of tying in. Let's put it back to where we were. I know it's not the most accurate, but you can kind of get the general feel for it. Let's just put a rectangle on here now so we can kind of see it. And there's a decent amount of noise there. So that for me would seem like a logical place for it to go. But you know, we need to see what the rest of the market's going to do. It can further bullish momentum just negate the HNS pattern, But at the moment, it hasn't ended right now. All we've had is the breakthrough, the inevitable pullback from that, and it's looking like a rejection. We've still got 3 hours on this 4-hour candle. But the closes of these candles, have, it's still lower lows. That's the thing. It's still lower lows and lower highs. And so at the moment, the momentum still seems to be continuing down. I would certainly be looking. I mean, maybe we get a turnaround here at 3-1 and the retest is there. But I'm still thinking we're going to go sub 3 cents on that. The real question then is, where does it go from there? What's to stop it going further? We've had, whether that's a shoulder, head and a shoulder, and it breaks down. Yes, it came back, but then it lost it again and went down. Just because the pattern plays out doesn't suddenly mean that it goes to reversal territory. It could still continue or range and form another pattern. So you just got to be vigilant with that. But I know a lot of you guys in the group are very passionate about Casper and you're quite invested within it. And now is a time to prove that. You either see it as a trading opportunity, you get out and you want to get back in, or you go, all right, I'm just going to suffer a paper loss. I see it getting a 20 cents in the next bull run, and if it can do that, then off we go. I know it's a lot of people talking about how high it can go and what it can get. For me, it's tough to speculate on that. I understand some of, I was going to say the logic, but some of the rules that Simon did in the last trading pub, in just drawing a similarity to Cardano and going, right, well, if Cardano's market cap's that, then we could get to this. You could say that about anything and go, all right, well, it could have a market cap of something else and only get to there. So whilst it's good to speculate and give you an idea and you can all count your Lambos or whatever, just for me, use case, usability, and development. It gets those, it will do well. But I am in one of the mining groups that Bijan put in there, just so I thought it'd be interesting to have a look. And I'm surprised at the rates at which the profitability is falling off, not just because the price has fallen, but just the rewards, because the hash rate's getting so hard. People who are buying these are struggling to meet the rewards. The ROIs are extending out to the right quite significantly. And the worry is if something shiny comes along, they just move across to that and cut their losses. But anyway, that we shall see. There is someone in the group, I can't remember their name, but they bought like 5 of these KS3 machines. Probably spent $250,000 on them. I think they said they arrive tomorrow. It'll be interesting to see in a couple of weeks' time what that experience is, and hopefully they'll share their journey on that and where it's going. In terms of Simon's position, people ask me all the time, but he's been quite clear. He's in a position where he can't really sell because he's got so much of it, and it just caused further falling in the market. So he's kind of pot committed, I suppose, in terms of where this is going. And yeah, he said he's going to ride it out. I don't know what his average buy-in. I know he bought some at 20, or 20 at 2, 2.5, 3, 4, 4.5. I don't think he's particularly too cared. So he's probably, even just going off those figures, they're around about break even now. But yeah, that's probably kind of it for that one. And maybe even kind of it for the whole talk. I don't really have anything else to talk about. I know I've not covered, I would have gone, had Bitcoin not have made its move today, into a bit more detail about some of the other alts and where they've been, but everything has just followed Bitcoin at the moment. So times like this, big green candles, it's not the time to buy in. Let market sentiment reset. Let's just see what happens with it, see what tomorrow brings and a couple of days afterwards, and and then make a move from there. And you know what? Okay, if I'm wrong and it continues to climb, okay, I lose out on in this case, a 1700 Ethereum, and I have to get in when I can reassess at 1800. Okay, that's just unfortunately where it is. But right now, buying now and just watching it collapse for me is a bigger risk. So I'm going to just sit. That has worked better for me than just jumping in the top end of a green candle. And I think others in the group say exactly the same thing. Kind of giving everyone enough time to at least come up with any questions or anything they may have. I'm not sure if you do have anything, but if you do, now's the time, and I'll see if I can try and answer it. Okay. Well, look, thanks again, guys, for that. It's the lot that I went through there. So I probably spoke a little bit too fast in some of the things, and maybe I didn't cover in as much detail. Relio, I was disappointed with that, and it just put me on the back foot straight away. If it can't be bothered to give me the information, why can I be bothered to really dig it out? And then other things happened with Bitcoin, so it kind of just sort of peeled away a little bit. I just don't think it's right. I think there's better real world asset ones out there, and I want to learn more about the sector, so it is a pass from me. Hope the dot stuff helped. I'm going to break the dot stuff down into a separate video just so people that aren't interested in watching Avenger calls, shame on you for not being interested. But if you're not and you just want to see that, we'll do that. And now at least I've recorded it, so it is what it is. And all the rest to say is just, enjoy the rest of your evening. Friday, I think, is going to be a pretty interesting day. Then we get into September and things like CPI come back, interest rates, federal rates come back. Powell's not happy with the way things are going. He thinks interest rates are going to have to go up again. Lots of things to play on in September, which may cause that red month to continue. But I tell you what, the light is getting brighter at the end of the tunnel. We're almost there. If you believe in the 4-year cycle, we're getting to a point where it's time to commit. And I'm certainly looking to do that now. And it will be a case of sitting on my hands and being boring and just enjoying the chat. And then when it gets to exciting times in 2024 and I'm looking at my portfolio every hour, then we'll just we'll enjoy it that way. But otherwise, guys, have a great evening, enjoy yourselves, and I will see you all soon. Cheers out.